on, everybody? Chris Franks with Texas West Capital. My good friend FiboSwanny, the mood mechanic, is here with his Metallica shirt on. He's just kind of fading into his chair there in the back. But look at it, folks. We made it. Finally. Fibo's been so freaking busy at his work, especially on Fridays when I do the show, especially around the time I'm doing the show. And that project's finally done. So He should be back here a bit more often now. And then, of course, we tried to do it last time and had the health issues with my mom, emergency that happened. And so we couldn't do it then. And then today, oh, my God, the internet went out. Like, if it's sometime like right around 9 o'clock, 9:30 or so, I was just like, this can't be happening. But it's back. We're back. You're back. Good to have y'all here. Show Fibo some love, guys. Say hi to the man, the myth, the legend. If he only had a porn stash, it'd just be like the perfect thing, right?
The metalhead.
The metalhead. There you go.
Yeah. You'd be surprised, man. I listen to a lot of hard metal. I really like that genre. A lot of people don't, but
dude, we grew up when it became big, man.
True. I actually listen to a lot of like heavy metal, like when I actually analyze a chart. It's kind of weird. It's soothing to me. I don't know why.
It makes the drops
it keeps me awake.
The music is harder than the drops. Is that what it is?
Yeah, exactly. Drop D, baby. You know what I'm saying? No. But
there you go. Sound on Fibo is a little sketchy.
Yeah, you were going in and out too.
Not sure
I don't
what that
know
means.
What was going on. You were going.
That might be my internet. We're going to try and make this happen, guys.
You can hear me now, right?
Let's go ahead and jump in. Yeah, I can hear you just fine. You can hear me, right?
Yep. Yeah, we're good.
Yep. All right. Good. Well, let's go ahead and jump into this in case my internet continues to have issues here, guys. So we're going to pull up Fibo's charts here. We're going to let him just jump right into it.
Let's get. Excuse me. Yeah, I'm a little under the weather. I'm going to try not to cough. I'll try to hit mute if I got to cough really hard. But let's start off with BTC. I'm going to go through a couple time frames here of what I'm doing and kind of following. On the 4 hour, what I'm looking at here, definitely bear zone here for a while. We went into the bear zone back on, what was it, November 12th? And been on a bear zone ever since. I had a target in here, and this is all gonna tie into the weekly and my weekly shallow fib that I'm waiting to see if we get 3 settles underneath to give us a primary trend change and not so much an extended correction. So this target here that I have it was at 85,850 is what this line was, and it fit really nicely inside the fib extension levels. What I did was I took a trend-based extension off the previous high, went down to a low here, and as this made a new high right here, I just wanted to see where the levels would be, and that's where I would be kind of looking. And we had 100% here at 93,630, which tested really nicely in here as support. If you kind of draw a line straight over here, tested a while, and then it broke, and then it kind of retested here, which made it resistance. That brought in the 84,200 to 87,400 range of the Fibonacci extension off this trend-based extension here. And of course, we went down to the middle here. It tested there for a second and said, nah, we're still going lower. But I did buy here on the 4 hour. I did buy on the daily, and I actually added to cold storage. I mean, because this is an area that I just want. It's one of the areas I was looking. My next area for cold storage is going to probably be 60K if this thing wants to fall apart. But the target hit here, and how I normally do this is when you get 3 consecutive settlements under the 141%, which we did. The last one was this last green candle here. We had 3 settles, so I didn't get out. And the couple of reasons I didn't get out, I just placed a stop just under. Basically, I set a stop at 79,999. Just to put it in there, just under 80K, in case this thing goes down to 80K and pops. I wanted to kind of keep this in here. And one of the reasons that I didn't get out as normal is one, the ADX is getting up to where, if you look back historically here, when this was getting up here for the bulls, it was getting up to where it made a top, and it's basically getting into that momentum exhaustion phase, like when you throw a baseball into the air really, really quick, and it goes real quick, and then it starts to stall and then falls. I think that's could be happening right in here because the ADX is getting kind of overextended a little bit based on historicals. So that was the first thing. And the other thing was that we kind of dipped down underneath the bear zone and then came back up in it when this candle happened. So I'm thinking, you know what, I'm just going to set a stop instead of just taking the slight loss. I mean, the loss would have been a little bit here, but I went ahead and just placed the stop. So far, we're starting to get some buying interest and moving us back up into there. But given that the momentum is still with the bears, it's still looking like we could crater much lower if that momentum wants to continue to crank higher here as the ADX increases. And the ADX, if anybody, it's just the indicator that measures the strength in the trend. So when this was elevated and the green positive directional index was elevated, the bulls were in control here. And then, of course, on this one, the bears are in control here with the red negative directional index. So, but it is getting historically high. Doesn't mean that it can't keep going higher, no, by any means. But that's how I'm kind of playing this 4 hour. So, and the thing is once a lot of these went into the bear zone, I really didn't play a lot. I kept my exposure really low because I definitely want to respect the bear zones when they hit. But it's really some of the further out time frames that I get a little bit more, like when the weekly hit a bear zone. I'll go over that here in a second. But based on how I do my threshold theory, it's not quite officially bearish yet, but I definitely want to respect the bear zone, and that's why I'm kind of keeping my positions really low and just kind of getting in at key levels. And if they don't, and it falls out of bed, my next order down here will be I'm going to round that up to 71K. And if I get stopped out of here, I won't be buying the 4 hour until it gets down to that 71K. And that'll be like my next area to kind of look for a long, or it kind of cranks back up into a new bull zone. But of course, we're going to have to get all the way back up to 96 before it actually officially gets back into the bull zone for the 4 hour. So that's what's happening here on the near term. When you go on to the daily, same thing, target hit. I bought at the 85,850, which was the weekly. I'll show you here in a second. But there's a couple other targets down here. Since we're same kind of thing, ADX is getting historically high.
Yeah.
We're breaking down and getting a little oversold, and I like it when it gets back up into the bear zone is when I like that signal. Kind of like what the 4 hour was doing right here, getting back up in the bear zone. I would have liked to seen this come a little further down first, but we'll have to kind of see how that goes. But I bought here too, and the stop for me on this one is 3 weekly settlements under that 85,850, and I'll show that here in a second. But what I like on this is this was an old threshold that happened when you take the fib from that break, and it was also the break of this trend line. We cranked to the upside and made a new high. And one thing I kind of liked here was the 61.8% level tested right here, bounced up, and then it broke. And then once that happened, that's when I said, if this breaks down, then we got a pretty high likelihood it goes to the 100%. And that was the 85,135 that tested right in here. Of course, we wicked all the way down to the 80K, but we're still kind of sitting right around this area right here. So
yeah,
I'm going to do the weekly on this one, but if you got 3 settles underneath it's 85,135, the target for this is the extension off of this, and it's anywhere between 68 and 73. Now
that's it's funny you said that, man, because my targets, we were looking at 80,000, and if it continued to break down, we're looking around 74 and then 69. So aligns pretty close with what you've got there. So I like that.
Nice. Yeah, and this target right here that comes in just underneath the 127 is the one for the daily here. If this ends up getting 3 settles underneath, that would be the target at 73.8. The 4 hour is the 71K. I just put that line in there just to show you that both of them are falling inside this range. And I a lot of times what I say is the 127 to 141 is always that first line of defense. Sort of like what was happening here on the 4 hour. That was the first line of defense. Now, yeah, it got the 3 settles underneath, but just the way it's acting in here, it's just not the same as in like a ton of momentum. If the momentum was just getting started, I'd be a little bit more, this thing's going to break down really, really hard. But I like that it's getting a little bit more overextended at this point in time, not the initial, push into the market there. So really, I just wanted to show that this range in here is where we would be looking, and it comes way back here on this this high right here, these 2 highs, that was resistance at one time, and then you got the low in here. So this line right in here that matches the fib extension is where that daily target comes from. If you wanted to know where that was coming from. So I just move it over here to kind of clean it up so you can see it a little better. But we are bear zone. Things are ugly. Things are definitely not, bottoms in or anything like that. So, you got to really use. I was just talking to Chris before the show. Risk management is key when we get into environments like this, because even though we're falling out of bed, you shouldn't have any stress if you had a risk management plan in place. Because with the breakdown of this daily, once it broke this area, basically the 100K, once that broke that area and brought the probability a lot more down to this target, then you don't want to have any exposure in it, or if you do, very minimal. So if you have a plan in place and you stick to your plan, you shouldn't be banging your head against the wall, bang heads. I'm just kind of using the heavy metal terms, I guess. But the risk management plan, what it does is it reduces stress, it reduces your emotion, it doesn't make you do weird things in this type of environment, because this type of environment is where a lot of people will do just crazy stuff. And especially just trying to pick bottoms. When they try, bottom picking, I get asked all the time, where's the bottom? Where's the bottom? Well, for me, I don't pick bottoms. No, thank you. I actually pick confirmations. So that's the kind of the kind of a short meme way of saying it. That I pick bottoms and I don't pick bottoms. I pick confirmations.
Yeah.
Or you can say, excuse me, under the weather. It kind of sucks. I think bottom callers get followers. Confirmations actually get paid. So that's the way I kind of look at it. So anytime you kind of see people saying, this is the bottom, this is the bottom, this is the bottom, most of the time that's going to be an act of futility. So because it's just not, they're just trying to grab that falling knife at certain levels. And it might work. But if they don't have like an explanation behind it, that's when you should run. Because if they don't have an explanation, then they're just throwing darts. And trading is not about dart throwing at all. So moving on, let's go on to the weekly. This is where it gets kind of interesting. The bull zone hit, or the bear zone hit here on the last week, and now we're on this week, and it's working its way down here. But even though it went into the bear zone, my system and the way I look at measuring mood and psychology and all of that, the previous shallow fib on this, and this is because we had this large move to the upside that never broke structure. Now it tested the 38.2% level, but never had 3 settles below it all the way up on the stair step.
Yeah.
But this time we went back into the bear zone this time, but we have not had 3 settles underneath this.
3 consecutive settles, right?
3 consecutive, correct. Yeah. And yeah, because you had 3 settles over here, and that doesn't count. Because if you move this down to where we were, the 38.2% level was right here. So it didn't break. So as this continues to move higher, you want to continue to move those fibs up, because that's measuring the proportion. I don't really care about price, only when I need to buy, and see where the target's at. Other than that, I'm looking for proportion and where the buying interest comes in, selling interest comes in, that kind of stuff. So I hit the target hit, and that's when I added a little bit to my cold storage. I don't trade the weekly. I actually use it as a guide. And if we actually get 3 settles underneath this, then the 61.8% level actually comes into play. And that's all the way down to 60, 60.8 is the 61.8% level on this, and that's going to be my target. If we get 3 weekly settlements underneath, consecutive weekly settlements underneath this, then I'm just going to be sitting on. I'm going to be taking a back seat, waiting for that 61K or 60K, somewhere right around that range, to hit as my buy. So, and another thing with that is we have a 230. There's a 144 EMA and then a 233. I use fib numbers for my EMAs a lot to look for patterns, because when you look at least what I've seen historically, when I look at fib retracements and extensions and all of that, when I use the Fibonacci for different things, the fib EMAs actually match up really well with the proportion of the fibs. I'm sure there's some correlation there somewhere, a phenomenon that I'm not going to be able to explain, but a lot of times historically they work. So right now that 233, because a lot of people are probably looking at the 200, the 200 MA, which I think is like around 50K or somewhere right around there. But the 233 is at 60.8. So that would be where my target would be, and that's where the first area that I would want to buy going into this bear market. Now, I'm not going to think that it's going to drop from 80 to 60. It might be a while, because if this clicks into a bear zone and we get the confirmation, then it could just kind of work its way down. Or what I'd really like to see, if it just crashed all the way to 61, filled me, and then got back up, and then we didn't have 3 settles. So the next 3 weeks that could happen, and the reason that it's 3 weeks is because it's a large macro look. And for that psychology to change, you got to give it that time for everybody to kind of figure things out. And if it's meant to be, and the mood switches at this point in time, then the market's going to say, okay, now we're bearish. But the thing is, right now where we're at is right around I think around a 33% correction, which I think we've had. I can't remember exactly where it's at the moment. But if you look back at the other 2 major corrections we had on this bull run, they were in the mid, right around 30%, maybe 33%, somewhere right around there. So this is still the realm of a possible correction to this point, but we are on that bubble that could make it not a correction and a reversal. Go ahead.
Let me just clarify real quick. Earlier you said when it gets to 60, I think you said 60.8 thousand.
The 61.8% levels at 60,833.
If you get 3 closes on the weekly below that area right there, then that would be your next. But you meant that would be your next weekly buy, not your next 4-hour or daily, right?
No, yeah, I wouldn't even really be. I wouldn't be buying it on the weekly, because I don't trade it. This is my back the truck up, add to cold storage is my spot. So if this ends up breaking down, I'm adding a lot cold storage at this point. That's just my buy spot for me personally, and that's where I would look at it. Now the 4-hour and the daily all get traded separately. The only reason I'm kind of using the weekly right now is because we're at that bubble, and it kind of matches up pretty nicely with the 4-hour and the daily. So I want to kind of use that together. I usually don't do that, but we don't usually have this type of environment either. So but the weekly is always my guide, and usually my guide for larger long-term purchases, put it that way, and not so much trading. So hopefully that makes sense. But I also have a limit order in there also, just in case this does fall out of bed and come back up. You just never know in this market. I don't think that'll happen, but I would hate to not have something sitting there if this thing wants to just fall out of bed, and then everybody and their brother goes, oh, let's buy, and then it comes right back up. But we'll see if that happens. And the 144 is right around that 74, 75, which is also a pretty key level that I think could come down to hit and then head higher. Because when you look at the daily here, that's where this kind of low area kind of comes into play right here. And so that 144 EMA on the weekly matches that up pretty well. So that's what I'm kind of looking at there. So I know it's kind of on that bubble, and I really don't know which way it's going to go, because nobody does. But you definitely want to use your plan, your indicators, whatever you have put together to use that as an edge in the market. It's not so much that you're going to be perfect and really know what's going to happen, but if you have that slight edge by doing this, looking back historically and trying to find better spots and all of that, you got a little bit more confidence that it could hold. But again, it's a market. It could just look at your line and go, and just go right through it. So, but you just want to use what you have put together as your strategy. And I stick to my plan, and that's the main thing. Is like I have rules and guidelines. It's sort of like Elliott Wave. Elliott Wave's got some strict rules, but then it's got a shitload of guidelines. So, but once you get a lot of practice and expertise and years under your belt, those guidelines start to become like second nature. You're like, okay, I know what to do here, that kind of thing.
Exactly.
Sometimes it's a little tough to teach, but it's an experience thing that you just kind of get used to over time. So unfortunately, but that's everything in life, right? You got to practice
exactly
and get better and those kind of things. So that's the weekly. A couple other things I wanted to show on here. This is one of the things that I kind of follow when it comes to the 21 and the 55 EMA on this 8-day. My 8-day is my cycle. Like I do a lot of macro analysis on cycles, and I use the 8-day, and that has done really well historically for BTC. So I've been using this as a guide, and a lot of times what I'm watching is the 21 fast EMA going through the slower 55, and then once that crosses to the downside, you get into the bears over here. I took the furthest point right here underneath the trend line. Take that same rate of change, you get that target. So once this broke, that was your target to buy. And then going back the other way, it broke this trend line going this direction. We had 3 settles. It wasn't until this point is when it actually broke back into the bull. So you would have been buying here, came back down and tested. This one just inched right there, but we also had 1 week up and 1 week, or 1 week down and 1 week up. So I don't really, this one's kind of an anomaly, but because if you look back historically, there's a lot more on this that kind of works this way. So anytime this is crossing, I look to bear or bull. We had the bear right here, and then that crashed down, head underneath the moving average, which hit really nicely here. And then we went back bull here, and we've been riding that ever since. So what I'm looking for here also is the cross of the 21 through the 55, which would also give us a really ugly picture if that happens. But we're getting in here tight at this moment. So when you're looking at this and we're trying to work these 3 settles, we're kind of in that limbo land, or what I would call the threshold of liminal space of what all the stuff that's going on. Emotions high, people going all over the place. So you're going to have probably a lot of volatility around this area. But when it comes to if it wants to keep going and this ends up crossing down through, that could give us a lot more downside. And I don't have a trend line on here, but if I have one, it would most likely be the one we're kind of testing at the moment. And if it ends up, if the moving average is cross, I don't know what the furthest point is, but I'll just do a quick one here just for kicks and giggles, that you would put this in here and you would start to get down into that 55. I kind of roughed it in. It's probably in the upper 50s to 60K of where that would be, which makes sense because we end up breaking down. This target down here at 60K is where I'd want to be buying based on the break of this. If this happens, we could kind of go in this area and it never crosses, and then we never have the 3 settles, and that would be a good time to kind of reverse this back, or not reverse us, but give us a signal or a confirmation that the correction is coming to an end and then working its way back up. Not trying to pick a bottom. I'm trying to pick a confirmation to let me know that we're going back the other direction, or it's officially breaking down and I want to look at much lower pricing. So that's the way I'm kind of approaching that too. And then lastly, but not least, on BTC, the monthly, I did this on Crown Show, and this is where the timing of my next high would be when that comes in July of 26. What I did was I took the monthly and I inversed it. So this is going the other direction. Because when you look at it this way, it really looks like it just should fall out of bed, right? So what I'm looking at on a couple of things here. One, the cycle. Once we got the high and we started this move to the downside here, which is really the move to a new high, but you get what I'm saying. Just flip your head around a second. We had this move to the downside, but when you look at the highs that we had, or the lows in this case, the high here, and then you move over here, there's the high right here, and then another high at this point right here on the price there, and then you go right there was another high, and then this one doesn't really count because I'm looking at this leg right here. So we had a high, so basically a high to high to high to high, and that's where I would get the next high. That just on the timing of what's happening.
Yeah.
The other thing I'm watching, which once we moved to the downside here, and this came up and tested this area and did not have three settles below this 83,556. Even though we went down and made this high and then we've corrected back, this is still going to be, in this case, resistance. But when you look on the other charts, support, and that's where we're testing again. And since we didn't break it here, it never broke into the bear zone there. But then again, we're testing here, and it might not break into the bear zone with the three settles, and then we'll be back on the trail, moving back down to a new all-time high into July. Now, where that number will be, I don't know. I still like the 3618. If this holds here and this continues, I wouldn't be surprised to see us get up to that 210K by July, but it's got to hold here, of course.
Yeah.
But then if it does, that's a lot of time for us to hold a nice support and get that bull run continuing again. And you just never know. Now other things could be, and I don't have any Elliott wave written on all this, but I don't know if this could be a 1 and then you have a little bit of a 2 here. This could be like a 3 extended, and then we're working a 4 here. I don't know. It could be something like that. But if that's the case, and we have this 3 as an extended here, the distance. Let me see if I get a thing here. The distance from this high to the bottom of that 2 here is about 100%. So if you bring this to this point here and we go 100%, you're looking at a minimum of about a 160. So I would say a minimum 160 by July with a maximum of 210 by July. So that'd be like the range that I'd be looking at. So I just kind of wanted to show that as even though we've corrected back, I like this range that we're at again to where this support held and went this way. So if it can hold again, and just look at this as a just basically we went up, made a new high, and just had a full retracement back down to support, and that's what we're kind of looking at. And then of course we don't want to look at our extensions, because if this ends up breaking with the 3 settles, you're looking anywhere between 53 and 60K right here, which would be right on all these wicks, which kind of comes into play on why I'm looking at this target here if this ends up breaking. So it kind of all works together in whatever time frames you're watching. So that's what I'm kind of looking at on BTC. Anything you want to add to that, Chris? Or
no, man. I like it. I mean, the levels you're looking at, again, they continue to align with the same ones I'm looking at. And of course, we look at them a little bit differently, but we both come from that same idea of, of social mood. And so, as we've seen in the past, we've been doing this for years together. And usually when our targets are aligning, they're usually pretty significant targets. Right now, the only other thing is I put, you said that a 3 potentially up. It's possible maybe we're just doing a large flat correction for wave 3. So it actually the previous high around, what was that? Right there around 108, 110. And then you pulled back and then it went up to the all-time high. So yeah, that whole area there. Yeah, basically from that. Yeah, so you have an A down and then a B up. And then you have the C wave happening right now, which usually happens like this. It's a sharp, finishing move.
Yeah. No, that makes sense.
So, potentially with that also aligns as if you draw a range around that, also would potentially put a spring on below that. It would be the wave A. So right there around that 74,000 area. Yes. If you draw that all the way down to the support right there at 74. Yeah. And then across, there's your range. And so as in Wyckoff, we would look, as that dipping down there and potentially dipping below that support as a spring. And so, you know, a lot of times we get these expanded flats that are nothing more than reaccumulation ranges. If you look at it via Wyckoff or, you know, the expanded flat for Elliott wave. So something I'm looking at, no guarantees, of course, but,
yeah. Well, like I said, it's an edge. It's what you use to have an edge in the market.
Exactly.
What question was, when you say your levels are coming in around the same as mine, is it your pivot levels, your S1 pivots, or what levels are you talking?
Yeah, no, I'm talking about the levels that I'm looking at for price to get there, not the actual pivots themselves. Though,
okay, that's what
so as we get to those levels, I would watch, you know, the monthly, which is on the daily time frame, and the weekly, which is on the hourly time frame.
Okay.
I'd look at those pivots, and most likely, if we're going to get a reversal around those levels that we've been talking about, it would probably be like, if you're looking at the 1 hour or the 4 hour, those are your weekly pivots. And it would probably either be the weekly pivot or the weekly S1 if we're going to get a reversal off that at those levels. And so that's something that I like to do when I'm looking at my targets, is I like to say, okay, as we get to them and a new week's coming in, is that the weekly pivot or the weekly S1 pivot right there? Because usually if it is, that's a pretty good indication we're going to reverse off there. And then, you know, and head up. So
okay,
that's what I'm looking for.
Okay, now I was just clarifying my head.
Yeah.
So no, that's good. No, that's good. Any questions out there on BTC from the chat, or you need anything before I head on to other things?
Yeah. Anybody got some questions out there for Fibo? The question is probably going to be, where's the bottom?
The bottom isn't.
There is no bottom.
The bottom isn't the lowest candle. It's the first candle that refuses to go lower and makes the crowd regret not buying it.
There you go. That's good.
How about that?
Because it's true though. So much of trading, you and I both, man, between us, I don't think people realize between us, we've got mid 50, 60 years of experience in the markets. I mean, that's huge. And, you know, we both understand that at the end of the day, it's your emotions and that psychology that's going to do you in. You can have the most perfect system, the most perfect understanding. And if you don't have an understanding of how your emotions are playing into it and how that psychology works, you're not going to follow the system. You're going to make excuses, right? You're going to give reasons why, I'm going to move my stop loss, you know, just this once. And, you know, that ends up killing you. But yeah. Here we say, we got some, let me see, anybody questions? No real questions, I guess. Where's the bottom, Bernardo, of course. I'll have a talk with him later.
All right, I'm going to move on. I'm going to move on to Ethereum. Ethereum is, I did the same thing here just because I just don't really have much positions on. I traded out all, BTC and a lot of cryptos have been going down, but if you've been trading other markets, I mean, SPY and gold has been really good to me. Yep. So there's other markets, and I've done pretty good this month for November that I'm willing to take a little bit of extra risk that I wouldn't normally, I guess. So in other words, like my book right now is sitting pretty good to where we like this target hit, and I got bought here at 27.35, which was the extension here to the 200%. But my rule is, or my guideline is that 3 settles underneath, you should get out, just like I did back here on here.
Right.
I just went ahead and just put a stop underneath in case this is kind of a wicked kind of a bottom area at the moment. I did the same thing on Ethereum here, where it did get to 3 settles, but I just put a stop underneath this at 26.19, which is low right now. The low is at 26.20. I just put it just a dollar underneath in case it wants to make a new low. Then I'll be out. But I'm just taking that little bit of a risk. There's not much there. So yeah. Plus my Ethereum bucket that I trade is nowhere near my BTC bucket. My shitcoin money is not real big. So I don't really trade that much on those. But since that happened, I just put the stop in there. So we'll see what happens. We're trying to get a little bit of a bounce, but we'll see where that'll go. Now, if this ends up getting stopped out, my next target isn't until basically the 2113 level.
Yeah.
So almost basically this 21, basically like $2,000 to 2,100 is kind of the same equivalent to a 61K for BTC. So if we fall down to 61K on BTC, then most likely Ethereum is going to be at least this target, maybe even further. Who knows? But we'll see. So if I get stopped out, I'm not looking at this until that point, or a new bull zone, which really needs to get cranking because it has to get all the way back up to 3,300, which is up around this area, which would make sense because I mean, if you're looking at it, it's probably this trend line here that would have to break.
Yeah.
And you would have to get up to that point and then break into the bull zone, which would take that kind of a move. Now, of course, if I got bought here, I could ride this up, and if it gets to that point and fails to go into the bull zone when it gets up there, then I sell and take that profit, and then rebuy another target on the downside. So right now I don't have a take profit target on this. Right now, my only trades right now are BTC at the 85.50 and this one. Now my stop's at 79,999 and my ETH is at 26.19. That's all I have on. I mean, I've gotten rid of everything else just because of the. Oh, that's not what I wanted. And that's not. That's just because this environment. I don't want a lot. I don't really play a lot of the short side. I will play a short side if the weekly goes bear and gets those 3 settles. Then I'll probably start playing some shorts, maybe buying some puts, stuff like that. But other than that, I'm usually just a long only kind of person. If it goes to the downside, then I'll trade other markets or I'm just not a big fan of going short on a lot of things because there's some added risk when you go short that people don't really take into consideration. But I just like the long because like when you buy an option, you know your risk, right? So anytime you're buying something instead of writing it, you're not. You're not taking that excess risk, but that's just me. I'm just a conservative old man. That Chris calls me old man now because he realized that I was older than him.
Hey, come on, man. Come on. You brought it up. You let me know that you were a few more years older than I thought you were. So
okay, I got you.
Still pretty close, man. I just turned 51, so
we're all right. I'm the good 55 fib number at the moment.
There you go. Right. A few more months.
Moving on to Ethereum on the daily. I haven't been trading this one. I've been waiting for a target down here, and this is down in kind of in that 2100 area. I'm not going to buy Ethereum on the daily unless this thing falls out of bed, and the same time I'll be buying BTC at 61K. Then I'll be buying this down there. Otherwise, this is just for kicks and giggles. I'm not really trading this one. Right now, it's testing the fib extension level to where we have not had 3 settles underneath this point. To where it would raise the probability to this point. So we are kind of testing that area. But again, we're also testing this area here. So maybe we can get it going back to the upside here to kind of negate this and get us back above this 2893 level. And then it would bring this in as a support. I mean, it's support right now, but it's being tested. It'll definitely give it a little higher probability of being support if we can settle tomorrow above that level. We'll have to kind of see how that works. All right, moving on. Gold. Traded gold a few times in here. I'm not in anything at the moment because we're in the bear zone. I did buy it at the 100%. So when we went into this bear zone, it dipped down to the 100%. And that was the first buy area. And I bought it there, and then it rallied up. I can't remember where I took the profit, but I made good money. And then it worked. And then we've been working our way to the downside again. We're in the bear zone, so the only reason I bought this was that this was the first support level while in the bear zone. Then we rallied up, and then it failed to break into the bull zone. I mean, it barely got there, but one thing I like about my system is I was waiting for this to click into the bull zone, and I was going to buy if it happened. But since it didn't, it kind of saves you from buying on a run that's really not forming a run, I guess you would say.
Yeah.
So that kind of saved me there. And now I've just been kind of waiting. And then my next target is, since I bought this already. Now I could buy this again if I wanted to, but I'm really looking to get back into the bull zone and then buy it and then look for upside targets once that happens. But for now, being in the bear zone, and I've already bought once and traded it while I was in the bear zone, that's where the further target down here, which comes in right around this low, which is just inside the fib extension level between 39.37 and 39.02. You could stretch it out to maybe some of these lows out here and make it a little bit lower, but you're all right in this area, which is inside the zone. So that's what matters more to me, is what's inside the zone. If you want to go all the way to the previous low, that's going to be just outside the zone there. So that's why I kind of like a little bit more on the inside of the zone to where the target would be. I don't have any order in here, but I'm just kind of watching it. I'm hoping that we get to the bull zone, which would be right now is about 41.30-ish, 41.29 at the moment, but this changes as price moves. But so you're looking at 41.30 before basically the recent high is at 41.34. So if this gets back up to that point, this is probably going to be right around that same price of where this was. And if it clicks bull this next time, then I'll buy it, and then we can be off to the races. But for now, bear zone. Yep.
It looks like potentially a triangle here. We've got from the all-time high to the first low, that's A, then to the next high is B, and then C, and then D. And this week finished off.
This?
No, all the way from the all-time high.
Oh, from back here.
Yeah. So you start there, and that first move down to around, what is that? Around the end of October there would be wave A. That's 3 waves down. And then wave B up to the November 13th swing high there. And then,
I like it.
And then, so that's A, B, and then C down to November 18th. And then D up to November 19th. And then it looks like, potentially E down there. So where you're looking to get in there are kind of where we start confirming it, right? That latest swing high, the most recent one, A, B, C, D there, that one. Yeah. If we're breaking out above that if you're looking at it as a triangle, that's your first clue that triangle, that may be a triangle, it may be complete. If you get through the next one, that's your wave B, that confirms it. And then next thing you know, for me, just a pattern target based on the height of that pullback would actually have us looking up there around 4,700.
That's nice. I like it. I love the confluence between what you're looking at on this pattern, and my threshold area holding almost at the same spot where you need to break of this E, and then once this makes a new high above D, then that confirms the triangle, which makes sense to me, from pattern trading. But then the confluence of this not breaking at the time it formed D and it went down and made E, I love it. That makes sense. I like it a lot.
I mean, it seems like you're the way you're looking at it fits up perfectly with it and sets up for that potential confirmation in there. So I like it.
Yeah, and my zones are made by fibs historically, which is so weird because, I mean, it all kind of comes together. I mean, it's like I said, it's a phenomenon that I can't explain, but it just happens. It's conscious and subconscious fear and greed out of people is what causes all this stuff. So as long as humans still have all that fear and greed in their emotions, I'll definitely stay employed, to put it that way. All right, let's no, that's good, Chris. I'm glad you brought that up. I didn't really look at that.
I haven't really been noticing either. I just, when you pulled it up, I noticed, and I just looked at my chart, pulled it up on my other computer over here, and
that's cool.
I like it.
There's some alpha right there. That right there is worth the show. All right, dollar. I don't trade the dollar, but I've been following it. Yeah, we've been in the bull zone and we've been working our way higher, but just like I said on before, previous shallow fib on this move to the downside has not broken at all on this move, and we're still right there at 100.71 as the area, and I still would have to have 3 daily settlements above that level for it to reverse back to make it a bullish market. So even though we're in the bull zone, it's more sideways to higher and more of a correction in this market. So a bullish correction in a bearish market. If it wants to switch, it's going to have 3 daily settlements above that, and then you'll be looking at 103, and then much higher pricing. But so far, it's just still testing that high right there. Momentum is still dog shit. So I'm surprised that that it's still there. I'm surprised that it's still kind of hanging there, but
Yeah.
we'll see. We'll see what happens. So even though it's bull zone, it's really not technically the way I look at it a bullish trend. It's just a correction in a bearish market.
Yeah.
So keep an eye on that. A lot of people like to see the dollar versus other things. So I used to trade it. I just tired of trading it because it's just dog shit, as I said before. So, all right. Plus, I just don't really like the dollar, so I like to trade things I like. You know what I'm saying?
Yeah. There you go. Right.
All right. SPY has been what I would say crazy. This bear zone. I don't know why the trading gods were with me in the last few days, but the bear zone here. Well, actually, this should be up just slightly. Some of this stuff might have moved. There we go. The magnet on this thing messes sometimes. All right. Bear zone, went into the bear zone. I had a target down here at 66.32. I just rounded up. It was 66.31 and a half at the 200% extension. And while it was in this bear zone, I was looking forward to get down to that level. Well, it hit that level and popped up, and I took profit. It came back down. I bought it again, went back up. These are all 4-hour candles. So I was just trading them in these 4-hour candles. I literally did it 5 times in a row. I did it boom, 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 boom. And I don't normally scalp, but I was sitting around and I didn't have a lot to do, and I was sitting there just kind of trading it. And I wasn't doing anything in BTC because I'm taking a back seat, just waiting. So I was just like, you know what? I'm going to just scalp because I haven't done that in a long time. And I'll tell you what, I did it 5 times in a row, and I got 168 points.
That's nice.
Out of this little area right here. I'm like, what the hell? But then it started to take off. I traded it up around this area a couple of times, but I decided not to trade it anymore. I wanted to buy it if it went into the bull zone, but just like on the other chart that we saw, it didn't break, and it kind of saves you because if it would have went into bull, I would have been buying here. But since it failed, and it failed miserably, I mean, like all the way down, and then retested the target again. But I had another buy in here. As this came down, I bought it right here because I was thinking, you know what? It's going to let me do it 6 times. Nope.
No, don't be greedy.
Well, I tried. I was thinking, well, I'm going to try since I made a lot here. I'm going to try it. So I bought it there, and then it went down pretty quick, and I'm like, well, shit. So I had this other target in here inside the extension that comes from way back here on this low inside the extension. So I was thinking, you know what? That's going to be a target that I'm going to buy. So I bought it again, and then I had the average between the two, and then I ended up getting out earlier this morning for like 2 points or whatever. And the only reason I did that, and I could have made a bunch more if I waited, but I got out because it's Friday. We're getting ready to go into a holiday week. Yeah. I don't want to hold any futures over a weekend and into a holiday because this thing could just eat me up. And I was like, you know what? I'm just going to take my profit and run. And then I just got out sort of break even, got a couple points out of it, but we're rallying up here. So same kind of thing. I would love to see a bull zone on this to buy. Otherwise, I'm kind of done with this at the moment. And since we're in the bear zone, I'm going to wait until it really falls out of bed down here or a new bull zone, which most likely I'm not going to be trading it next week because I'll be out a few days here and there because of the holiday. But it'll be the week after that. I'll take a look at it, see where we're at, and kind of go with that. But given that it's Friday, I got out. Luckily, I got out. I didn't. It looked pretty ugly there for a second. I'm thinking, oh crap, here we go. I'm gonna have to take a little bit of a loss. But it kind of saved me on this last candle. So, if anybody's still in this, you're making good money. Put it that way.
Yeah, it's good today. Yeah, I even traded a little bit this morning and ended up passing another prop account. You know, that's what we do there with the Liquidity cartography group, the group coaching guys. But yesterday, man, that high up there yesterday, I got out. We made some like I don't know $600-700, few trades there in the hour. And we got out like I said, okay, you know what? It's done. I'm done for the day. I'm going to get there, get your charts done and updated. and it was right there around that top before that big move back down.
Nice.
So, I didn't make the 168 points you made across there, but, passed the account in 4 days with today. So, there's so much. I guess I just want to say it's because everybody gets upset, right? They say they want to be traders, but they only want to, what they mean by I want to be a trader is I want to buy and immediately I want price to go up and never come back down below. And if it's a bear market or if it's a big discount coming in, I don't want that, right? They don't really want to be traders. They want to be hopefully, catching the bottom and riding it up and able to get out at the top. But trading, man, you and I both been doing this so many, decades for both of us here. Trading is awesome because you can do it whether the market's going up or down or sideways. That's the great thing about it. And, and people tend to, they fall off. They're fair. What do we call them? Fair traders, right? They're fair weather traders. They want to be it when price is going up. They don't really want to trade. They just want to buy and have it go up immediately from the time they buy, never go below them and hope they can make money on it. But, anybody listening in, if you don't understand, trading is this amazing skill that allows you to make a ton of money. You don't have to worry about whether we're going into a depression or a recession. You can make life-changing money if we do on the way down. But you have to change the way in which you're looking at the market, right? You have to. I'm like Fibo. I'm much more biased to the upside. But I'll tell you what, I have no problem. You can buy bounces, you can short whatever, especially if you're playing futures. In bear markets, I mean, there's so much money to be made. So I guess just something to kind of keep in mind there.
Yeah, and we always talk about putting plans together and strategies and those kind of things, and I've done that for myself. This might not work for everybody, but the one thing that I actually, the profit's great. Don't get me wrong, but what I like is to see that my stuff is working, because the way I went into the bull zone here and it really didn't take off. It was just more of a consolidation. As you can see, the ADX was really low, and it really didn't break out. And then it started to head down. But when I apply my system and I look at my fibs, this level here is a level that others aren't even considering. You know what I mean? Like this is my level based on my stuff. Right. And the weird thing is this 200% is out in the middle of nowhere. Really, there's not a lot going on here. There might be something, but I like that the fibs actually gives you that extension, and it hit like a bunch of times, which is great. That's what I like to see. So to me, it's those kind of things that I really like, is because then the proportions that I'm starting to see or see in these markets, it's working. And that's what makes me more happy than anything else. And then once this went up and then it didn't, and then it kept me from getting my butt kicked. And then you work down here, and then we're inside this low right here, which is inside the fib extension that comes from this 200 getting broken here. And then you go back in history, and then this spot right here matches up. That's the best fit right here for me. So when I put the fibs in here, this gives me that extension, which falls inside that previous low right there, which is nice, which also hit. So really, to be honest, the first line of defense is this level right here. And that has held so far. So this could be so-called the bottom. Now, the bottom for me, like I said, I don't pick bottoms. I like confirmations. Yep. Confirmation will be a close above 68.05. Then the probability of that low being in is really, really high. But otherwise, it definitely could go lower because we're in the bear zone. And if it does, and we get 3 settles underneath this, then that's where this next target comes into play. So I just kind of use those same proportions and kind of use that as my guide. Now, it takes a little time and expertise to figure out where the zones are, and I try to teach it. And it's a tough thing to teach because it's an experience thing. And I don't know if you ever tried to train somebody on something that you just do because it's second nature in your head. It's really hard to do. It's like it's hard to explain sometimes. So I try my best, but I'm not saying for people to mirror it either. Take the ideas that I have and run with it and find something that works for you. And you'll be surprised on what you'll find when you start digging in and getting things that fit your personality and your emotions.
Absolutely.
Where you can keep your emotions low, put it that way.
Yeah.
All right, moving on. Let's go into some stocks. MSTR went into the bear zone back here. There was a 200% at 197. I have not been trading this. I've just been following it because others have. But the 200% here at 197.36 was tested, and then it popped up. Let me see if I can get this. Let's move this over a little bit so you can see it a little better. The 197 here tested, it popped up slightly, and then went down. We've had, well, actually, a close today will give us the third settle underneath this 200%. And if that's the case, and if that happens, and if you're long, I would advise myself, if I was in this, to get out, or or put a stop just underneath this low, whatever way, whatever risk you can apply to your books. But the three settles underneath this right here. If you move back in history here, this 100%, you take the extensions. It's a pretty large extension here between the 127 and 141. But this low in here, a couple of lows in here, get right inside that edge. So I kind of like that as the area to watch if this gets that third settle, which it looks like it could. Now I'm thinking that this low down in here at 101 is going to be probably pretty close to BTC hitting that 60K is what I'm guessing. So if they want to hold this level in here, BTC is also going to test its support level. And if it can hold where we are on the weekly and it starts to pop higher, then this might be the spot to kind of get back in. You're getting overdone on the momentum historically. You're about to dip into oversold on the bear zone. All of that is still looking like BTC. So if this can hold, maybe we'll pop up a little higher. But if not, much lower targets, just like everything else that we've been looking at.
Yeah.
And then if you go on to some others, you got coin, bear zone on this one. The 200% there is at 222.90, so that would actually be a buy target while in the bear zone if you want to tackle that one. Not quite there yet, but again, momentum's building, so I wouldn't be surprised for it to get to that point. But I would also do the same thing. The 222.90. If you get the three consecutive settles, I don't have it in here yet. I'd have to see where the best fit would be. With this gap being in here, you might actually want to move it down to somewhere around this area.
Yeah, exactly. That's what I was thinking. Yeah.
Yeah, it actually might, and that's where the guidelines come into play. You don't have to have this as gospel. You can say, well, there's a gap here, and if it's going to get to this point, it's most likely going to get down to this point. Because there's just going to be a lot of buyers probably just sitting in their algorithms and a whole bunch of other stuff, just sitting around that spot.
That's a great breakaway gap right there. It looks like there's potentially an inverse head and shoulders, and when it hit that neckline, it just took off, came back, pulled back a little bit, and then kept going. I love it. Looks nice.
Yeah. So the way I would have to tackle this on the way I do my stuff, since we're right in the middle of this window, I'd have to go to the next low. And then this is what I would be looking at, and it would be inside this zone here, which kind of brings in these lows down here. So if this ends up, getting the three settles underneath this level, then I would probably be looking down here on that. But we're not even there yet. I'm just kind of showing you some steps of what I would look at. But right now the target's 222.90, but the gap to fill on the high there is at 213.60. So anywhere between 213.60 and 222.90 would be that little zone to look at there. So you're looking at, this is your little area in here. So you could actually make the target somewhere in that range if you wanted to. So there's coin. BMNR, this is one of the ugliest charts I've ever seen. But it's weird because when I apply my stuff to it, it's just really odd looking at the moment. And really ugly, and really a major downside to it too.
Don't let Tom Lee hear you say that, man. That's his baby right there.
Because right now, based on my stuff, it was the bull zone here for a long time. Got up to these upper levels. Then we went into the bear zone at this point, and we were well under it because we had this huge thing, so it kind of messes things up. But I still stick to plan on how everything works. I got my start of my fib zone, worked it up, broke it into the bear zone here. But unfortunately, since we were already well underneath this, even the 61.8% level right here, this opens up a lot of risk to the downside for me. So I wouldn't even touch this with a 10-foot pole, to be honest, because I just don't have anything to go on. I mean, if you want to, like when it comes to my stuff, now there's other things you look at. You can look at this high right here as a horizontal, which we could get close to. That might be a buy, those kind of things. But for the way I look at stuff, this is just something I'm not even going to look at. But I'm just kind of showing you that there's just a lot of risk on the way I look at it.
That's
on this particular
well, I'm glad you said that, man, because that's another thing that I spend a lot of time talking about, which is listen, figure out your style, your method of trading, figure out what you're comfortable. Not everybody sees the chart the same way. Figure out what works for you, and then don't worry about what somebody else is doing. You trade again, if you get in here and the way you look at the chart says, man, you know what? I'm just with the way that I normally do it. This does not look like anything I want to touch. Don't trade. It doesn't matter if it goes up. That doesn't, too many people that get there go, oh, I should have gotten, right? Hindsight's 2020, right?
Yeah.
But the reality is, as traders, we figure out the way that makes sense for us to look at the charts, and then we trade that. And we don't worry about if we missed a trade here or there. We're going to miss tons of trades, right? But that's where that whole emotion that you and I talk about a lot comes in, because that emotion's going to kill you. That, oh man, I should have done that. I should have done that. Well, no, you shouldn't have. If it didn't fit what you normally look at, then it would have been just a lottery ticket. Maybe it would have been just like maybe not. But if you're trading, why are you doing something stupid like that? Trading should be about, listen, I look at it a certain way, and within the way I look at it, here's my risk management, and that's what I do. I don't just buy something because my emotions say I should buy or I should sell or whatever.
Yeah, and a good rule of thumb would be if you're out on X, which a lot of people are, and people are talking about certain things, like if they're talking about Bitmine, and you're like, well, if everyone's talking about it, maybe it's a good time to buy or whatever. But then if you go and you pull up the chart and it doesn't fit what you normally look at, just move on. There's other things to trade. So that's a good step on anything that's being talked about. If you're out there on X and you're getting excited about certain things they're talking about, or if they're talking about MSTR or coin or whatever, and you pull the chart up and it's nowhere near what you look at, then just move on to something else. I mean, it's pretty easy.
Yeah.
But
look at you. It's pretty easy. Just do it. Damn it, really.
No, I mean, just like when I say easy, it's like there's other things you could be looking at.
Always something else. Yeah.
So much to go with. Like, it's crazy. Like, because a lot of times people will ask, like, how do I find setups and all those kind of things? Well, a lot of times I only stick to a small watch list, to be honest. I only have like 5 things I look at, and I stick to those. And every once in a while, like if I start seeing some people in my group or others are saying certain things about certain stock or certain whatever, I'll pull it up and look at it. And if it makes sense and the setup's there based on what I do, then maybe I'll get in. Otherwise, I'm just going to stick to my small list and just be an expert in those 5 things and just stick with it.
Yes.
Because to me, it keeps the stress down for me. But that's
it does, because what does everybody do? What do new traders do? Same thing we did when we first started. You look for everything. You look at everything, and that's going to drive you freaking insane.
Yeah, no, I used to have like 30 things I was looking at. And I'm thinking, well, oh my gosh, if this is going this way and this is going this way, and then you look at it, I'm like, all right, I'm still above water. I'm like, forget that. It's too much.
Well, see, and what I've told people for years now is that, listen, folks, professional traders tend to specialize in something. They tend to have a specific sector or something that they specialize in, and that's what they trade. They get to know it. They're energy traders, or they're cattle futures traders, or they're tech traders, right? Or whatever. But the other thing that I think is really important as well, and it's something you and I both do a lot of, is we don't just stick with just one market, right? We trade futures, we trade crypto, and if a stock comes up, hey, we're doing that, right? Maybe we'll trade Forex, right? And the great thing about that is, instead of being stuck in crypto when crypto's doing the down thing and it costs a lot of money to trade because fees are so damn high and whatever, well, now you can pivot to futures. You can trade the S&P futures. You can trade gold futures. You can jump over. You can trade the U.S. dollar against the yen or the euro against the dollar. You know, and and all of a sudden, it doesn't really matter what's going on in one or the other. You've got something to trade somewhere, but you don't have to follow absolutely everything. Pick a few out of each one and just stick with that and learn how they go and trade that. You're going to be a hell of a lot better off.
Yeah, and a lot of people would categorize that as boring versus being in the excitement all the time. You know, because and to me, that's where I think the longevity of doing things is boring.
Yes.
But sometimes the excitement gets in, and you're like, oh, I gotta jump on this, blah blah blah. And don't get me wrong, it's hard to like things like Zcash, you know, the other day going up, like, oh my gosh, you know, like even though it did what it did, never touched it, and I never, not gonna, because it's just not something that I trade. Now, I could have made a lot of money getting in at the right time, but I also could have lost my ass too. But I don't know. By the time I looked at it, it didn't fit what I was looking at. I'll actually have a chart on it here in a second. But again, it's small watch list. Keep it boring. Every once in a while, if you want to throw out a little crazy, you know, based on something, you know, fine, you know, but make sure you have risk management based on it, you know, that kind of thing.
Make sure your career is boring, right? Your career is
exactly. Because sometimes boring is fun. Because at the end of the month, you're like, oh, I did pretty decent over time.
Yeah, that account looks good. It's not. It may have been boring to get there, but it's nothing boring about the money in the account, right?
Exactly. All right, Tesla. Tesla is right on the edge of the bull zone here, trying to go bear. It has not yet. Went into the bull zone back here, went up. We definitely hit the 200% here, and that's where the target was. But then instead of going back in history, I don't even know where that would be, to be honest. But so if we went back, looks like about this high right here. So if you went down to that high, yeah, there we go. Perfect. You get this 200 hit. So you have to look for the extension, and the top of this extension is the trend based, or the trend line objective. Take the furthest point underneath to the trend line, and then go to the upside there. Kind of matches the top of this zone right here, where I have marked as a target. So I've been looking at that as the next target to the upside. Because I'm not trading this, but if you did, you probably got out at this point. It rallied up higher, and then it kind of used this as a support level, and then popped back up, and then it broke back down to the downside, and now it's resistance.
Yeah.
But if you did, the shallow fib is there. You probably would have bought back in right in here, and then you'd be underwater a little bit, but you're still in the bull zone, and it's still alive. But if it ends up clicking into the bear zone, you would get out immediately because you've already had 3 settles underneath this shallow fib. Because if this went into the bear zone, this would become the previous shallow fib, because this would be the previous zone. But it would have to have 3 settles under this, which it already has. So you get out immediately if it happens. But if it holds here, and you're long at that point, then you still hold on to it with the take profit target still up here at that point. Now, if it goes into the bear zone, and we have and after today, basically we'll find out today or not if it happens, and if it does, then this previous start of the threshold on here would be the target, 344, if it goes bear. So, but it's holding on. It's treading water. It's right at that point. So we'll have to kind of see if it holds or not. And it kind of filled that gap right here. There's a small little gap that's kind of that support area. So we'll kind of see if it holds or not. NVIDIA, same thing. We're right on the edge of the bull zone here. This one had a couple of things. I have a trend-based extension on this to see where some of these upside targets would be. My next target is 224.18. But it's also those kind of things where it went into the bull zone. Well, back here it went into the bear zone. But if you take this and you move, wrong one. Let's move this one. If you go into the bear zone here, and you had a certain high, basically the high was here at the moment. So you can see the 38.2% level didn't even come close. And then as you bring this up to this high right here, it's still nowhere close. So this keeps going and is extended all the way out. So right now, this previous shallow fib is right where the market is testing. So if this actually goes into the bear zone, you still need to have those 3 daily settlements underneath there. And if that happens, then the next level down is the 61.8% level at 155. So if this actually breaks down from the 179 level, it'll be 155 to get back in, or it holds, and this whole thing held, and this is kind of the buy area. Well, you should be buying in here, even though the way I would do this is, if I was trading it, is you went up to this point, made a new high. I would have bought the shallow fib, and then I would have been underwater. But I would also be buying this level, because that's that last line in the sand that I want to be long at this point. And then if it ends up breaking, then I'll just take the loss. But if you didn't buy up here and you're still looking for a spot, this would be a good spot to buy, because the risk reward on this point is good. Because if it closes, then you can test the 3 settles in there. And if you don't like the 3 settles, you could always use different types of stops. But that's what I do, because most of these things are spot type stuff. It's not futures or leverage. If I'm leveraging, I'm probably going to use a different type of stop, probably more percentage based, or there's other ways of doing it. But like 90% of the time, I'm going to be looking at the actual fib levels and getting those 3 consecutive settles, because that's worked really well for me historically. So I kind of stick with it. All right, and then last chart I have here is Zcash. Definitely still in the bull zone. If you start on, I had to do with such a large move. I used the trend-based extensions. I started here at my threshold when it went into the bull zone here. Then it went up nice, and then it just took off, right? So what I did was I took this as the move, and then it went to a correction right here, and then headed higher. So you have the 61.8% level right here. You have the 100%, which tagged really nicely right here, and then it broke out to the upside, hit the 200% right here off of that, and then it came back down, and now it's retesting the 100% on this. So I set up a new trend-based extension off of this leg, and then if it worked here and this low stays in, then I want to know where the next level is, and that's where the 980.90 comes into play. So if you were trading this, you would have actually sold out at either at 444 or 702. I don't know. It's so crazy. But so you'd be at one of these, and then you would have been bought back in at the shallow fib while it's still in the bull zone. So you would be long at this point, or if you're not, I would wait for this shallow fib or 3 settles above this 702.90. That's how I would kind of attack this. So I would buy it at 475 basically, with a 980 target, as long as that holds with the bull zone holding, of course, and then work your way higher. But the one thing that I like about this is the levels worked out pretty nicely on that 200% hitting really nicely at this point right here. So I don't know. That's Zcash. I haven't even been trading it. I wish I was.
Yeah, we all wish we were down there, right?
Yeah, back here. But the thing is like, if I would have done this the way I normally do, and I didn't even look at this, but like the bull zone went into this point, so you would have bought. Let me put in just out of kicks and giggles here. I know it's really tight because of this big long thing here. Then you would have bought right here. The 200% was right at this point, which looked like it tried to stay as resistance there. But then you'd have to move this up to that next level. I'm just roughing it in here. Then the next 200% would be at 71, which was right here. So in other words, if I would have bought into this area, I probably would have sold here.
Yep.
And then in that case, where's my? In that case, if I would have went up to that point right here and sold, I guess the 38.2% did get hit right here. And then it went up to the next level. Oh no, it would be up here. So this one right here would have been the 200%. So you would have bought once, sold, bought again, and sold. And then you probably wouldn't have been doing anything, and then I would have lost out on all of it.
Missed the whole move, yeah.
Yeah, pretty much, because the way I do things, it wouldn't have made sense. The only way I would have done it is if I had 3 settles above this, 1, 2, and 3, then it would be up here, and I'd be like, really? Do I want to buy it here? But it went up higher and then came back down and hit as support, and then kept taking off. But the way I do things probably would not have captured all of this.
Yeah.
But since it's running, now I could actually play it the way that I normally play things if I wanted to, and that would be buying at 475 with a 980 target. Or if this ends up breaking down, then I look at 307, and then if this breaks down, then you're back down in the toilet again, most likely. Yeah. But let's see how that kind of plays out. But
that goes back to what you were saying earlier, and what I kind of kept reminding people about, which is play your style, right? The odds are you're going to miss most of the big moves that are ever going to happen. That's the reality.
You get lucky. Well,
you'll get lucky once in a while, but you're going to miss most of them, right? But you don't have to hit them. That's the whole thing, right? To be a profitable trader, all you have to do is use proper risk management every time you trade, every single time. Because the one time you don't will be the time it wipes you out, right? Use proper risk management every time, and then consistently lock in profit. Doesn't mean you're going to make doesn't mean every trade's going to be a winner, but the more consistently you're locking in profit, the stronger it's going to make you as a trader, the stronger it's going to beef up your capital account. And I'll tell you what, you're most likely never going, or maybe going to be lucky and get 1 or 2 trades like this in your lifetime. But you're going to be well ahead of that if you're consistently locking in profit, because time and compounding, right?
Yep.
I mean,
even if I would have done this and I got those first 2 trades in, that right there would have been decent.
Yeah.
No, this is just crazy. But even if I would have just done those 2 and I missed out the rest, yeah, it kind of sucks that you missed out on it. But again, like you said, it's just that consistency. And then the next thing you know, when you get your equity statement, you're like, okay, it's a little higher now. So when I go to put in my next buy is going to be a little bit better as a 10% of the way I do things. That dollar amount will be a little heavier on the next buy because I have the capital to do it with.
Exactly.
Versus going the other way. You're like, well, crap. Now I can only go half of what I did before because I don't have any money left.
Yep.
So yeah. I mean, these are fun if you get them, and I hope somebody did, because I mean that's just crazy.
If they did, they're probably still holding it, thinking it's going to continue up higher, and it may
if
not.
They're doing that, they need to be slapped. Get out. Take your profit. Move on. You can always get back in another time.
Yeah, at least take some of it, right? Take some.
Yeah, or at least half or something. Yeah, for sure. Yeah, take something and put it on the books. Lock it in. Now, there's a thing called revenue recognition. Recognize that revenue, baby.
Otherwise, it don't mean squat. Yep.
On paper, it doesn't mean nothing.
Well, the big headline going on right now is, stock market lost $1 trillion. Well, there was nothing recognized in there. It was all phantom until you actually pull it out. So you can say all day long, I lost money, but you didn't lose a damn thing because you didn't have anything. You never locked it in. You could have, and that probably hurts even more. You could have and you didn't, but you didn't really lose anything because you didn't have anything. You never recognized that, like you said, revenue recognition, right? You never actually recognized it. And I think we really need to push that more, to the traders that are following us, so that they can start thinking the correct way we're in here. Because otherwise guys, listen, I'm talking to y'all that are listening right now. Here's the truth. You're never going to make it, 5 years, 10 years, hell, 20 plus years like we've been in. You're just never going to do that if you haven't learned how to take profits. If you're constantly focused on being scared that it's going to continue up without you, and so you don't take profits, you're just screwing yourself. Consistently taking profits, always using proper risk management. If you can do those 2 things, you're going to be eons ahead of most every other retail trader out there. After a year, after 2 years, after 5 years, and it's just going to keep building.
Yeah, so when you say proper risk management, that means when your system says to sell, then you should sell.
Yeah, absolutely. Don't move down. Don't move the stop loss, or kind of take it off there. Well, it'll come back up. Yeah, no, it rarely ever does.
Now you can do little things here and there if it fits your book, like what I was saying earlier. Like I stayed in this because I can afford that little bit of a extra risk, but that's part of my risk management plan. It's not like well, if it gets down to close to 80K, I'm like, well, I'm going to move my stop down to 74 because then the next thing you know, you're going to lose another $6,000, and then you're going to be like, damn it. So in other words, I'd rather just take the little bit of loss and buy it at 74 instead of running it all the way down to 74 and losing the whole entire time. So yeah, it's just sticking. If your plan says to do it, then stick to it. I mean, I know it sounds easy to say, because when you're in the moment, you're like, man,
emotions are tough.
Yeah, it is tough, and it takes a long time. But early days, yeah, I did that a lot, moving things down. I'm like, it'll reverse, it'll come back, and the next thing you know, I'm out. I got killed, and then I got to figure out how to get in again.
We've all been through it, right? I've talked to thousands, probably tens of thousands of traders over the last, almost 2.5 decades now. And anybody that's been in it any length of time, like you and I have been, we've all done it, right? We all come in traders come in and they think, unfortunately, they define themselves by their trades, right? If they make a good trade, I'm a great trader. If they make a bad trade, I'm crap, But we're traders. Trading is something we do. It doesn't define who we are. And, you really have to recognize that, because we all go through that when we first came in. I went through it. Fibbo went through it. He just told you exact same things. All of you new traders that are coming in that you go through, we went through. You don't just wake up and decide, well, I'm going to be a trader today, and you're just killing it from day one. That doesn't happen. A lot of it that you're going to have to deal with is just being in the situation over and over and over again, and getting used to it and getting to understand how you react in that time. And then once you start to understand, you need to start developing rules. Well, if I get to this point, my emotions are going to jump, and most of the time I'm doing this thing, which is killing me. So I need to, at that point, do this other thing. As long as you're just going in willy-nilly and YOLO and DGen and all this silliness, you're never going to be a trader. And people are like, oh, well, I'm just a gambler. You're not even a gambler. Gamblers have systems. They may not always be, but they have systems. Yep. If you're a degenerate, you're not a degenerate gambler. You're just a degenerate. You're just somebody who threw money out there and said, well, I'll probably never get that back. And you don't want to be doing that, right?
That's a good point. Gamblers definitely have systems.
Yeah. Not that I'm a
professional gamblers do.
Yeah, well, and that's what we're talking about, right? Professional traders, professional gamblers, all those things. Everybody else just tosses money in and prayer and a hope, and you can't, you're not going to make it that way, guys. Again, what Fibbo and I really try and do is we really try and get you to see this other side of it. Because if you can figure out this other side, if you can get that down, that's going to be the thing that makes the difference in your, career as a trader. Whether it's something you want to do professionally like Fibbo does for a company, or whether it's just something you want to be like me that you can do for decades on out there, and just make a life out of it on it alone on your own. You have to get it figured out. You have to get that part of it figured out. No matter how much,
or do both. You could do both. You could.
Well, yeah. Well, but I mean, you have to get that part figured out before you can do any of it, right? Because no matter how well you memorize the rules and the guidelines of whatever system it is that's out there, as long as you don't get that other part figured out, as long as you don't get that, what we're talking about, emotions and putting plans together and sticking with stop loss, all these things, as long as you're not doing that, you're never going to follow the rules and the guidelines of this, whatever system it is. You'll always make up an excuse why this time is different, why this time you don't have to have your stop loss, why this time you can move your stop loss down lower, why this time price definitely is going to go up. Here's the real trick. Here's the secret, guys. I'm going to tell you. It rarely ever goes back up until after you're back out finally. So, you get in, you put it down, it's got to go up, and then finally you give up, or it hits your stop, or you liquidate you or whatever. Then it goes up.
So many days in the early days, I don't know how many people, like when they first get in, they're thinking, does the market really know where my stops are?
Oh my God, yes.
Like I did that for like the first 2 years. I'm like, how in the hell do they know?
How
Because
do
it
they
feels
keep
like it comes right down to the point where your stop is, and then it just launches like a freaking rocket.
Yep.
You're like, screw Fibo, we're moving on.
Screw you, Fibo. You don't get a career doing this. We're going to take it from you.
I mean, it was weird. I mean, it's like, am I doing something wrong? Or like, and then you figure out over time that, yeah, you were doing exactly what those liquidity hunters were doing. Yeah. I'm putting orders in right where liquidity is, and everybody's like, yeah, boom, suck it.
Thank you very much. Take it and go with it.
Yep. You know? Thank you very much, and move on.
But we can laugh about it now because that was decades ago. But man, at the time,
I remember though. It's you remember those days for sure.
I'm about to say you never forget, do you? Never forget.
No, but like I said, you could do both if you wanted to, because like for me, this threshold theory and everything is just my personal, like how I trade on myself that I've learned over the years. I put something together that fits my personality and how I approach things. And then as a job, I'm literally trading or basically risk management and trading for clients. And that way, then you're kind of advising their risk management strategy on how they could approach what they're doing. So you can kind of do both if you really enjoy doing that, which I do. And that way I could trade on my own in my own system and do whatever I want. And then I can apply my knowledge and expertise to other people's risk management programs.
Yep.
And that's what I mean. That's basically what I do. But I do it as the head TA guy. So everything that I do is technical analysis based.
Yeah.
That fits their risk management program. That kind of thing. Which it's not easy, but that's a fun job if you like to apply technical analysis.
If you like people calling you up and freaking out and
Yeah, there are those days, and then of course the times that you're wrong, and and people are like, that kind of thing. But it's going to happen, that kind of thing. That's why it's called risk management.
Yeah.
Because if you didn't have to, then you won't have to manage anything. It's just everybody just wins all the time.
And and that's a great point too, because a lot of times people love the job they're doing. They love their, maybe it doesn't pay them what they would like to be paid. Maybe it doesn't do it, but they actually get a lot of value. They get a lot of, feel good out of what they do. They truly enjoy it. And so, if you learn to do trading properly, again, it is that thing you can do on the side. Now it isn't something, listen guys, I know a lot of y'all, because they've gamified trading and it's on your phone and you're pulling out your phone in the middle of your workday when you're supposed to be doing your other job and you're trading. Don't do that. First of all, that's not fair to your employer. You're doing your thing on their time. But second of all, you're not focused on the trading. You have to be focused when you're trading. You've got to be focused on what you're doing. But you don't have to trade the intraday. You can trade larger swing trades. You can find good place to invest. Whatever. But it allows you to make more of that money that maybe you'd like to make, while still being able to do the thing that really gives you a lot of feel good, really, that you enjoy doing day to day. And that's perfectly fine as well. Me personally, listen, guys, I grew up, my dad was in the Navy, and I saw my dad, very, very intelligent guy. But he, the thing he hated, but he had to deal with it, was he would hate when you'd have the new guys come in, because, he'd have 15, 20 years in there. And the new guys would come in, they'd be higher ranked because they've got, whatever kind of education behind them. And they come in and he would have to listen to them and do as they said, even when they were wrong. And he knew they were wrong because he's got time and grade. He's got all this time doing this. And he would say, listen, son, you don't have to like the person, but you have to respect the uniform. You have to respect their rank. And I don't know, man, that always hit me wrong. Growing up, I was like, there is no way I want to spend the rest of my life, having to bow down to some guy that doesn't know what the heck they're talking, whether it's in the military or anything else. And so that's what really prompted me, to learn trading, to get in there. But then it took years of doing it at the beginning. It took multiple years doing it, of screwing up, before I finally got serious about it and figured out, okay, if I am serious about this, I need to get these things figured out. Otherwise, I'm going to keep losing money that I don't have, and life's going to suck, and I'm going to have to go get a job anyway and work for those people I don't want to work for. So, that was my beginning. That's how I got into it. I just, man, and to this day, I can't stand the idea of having to listen to somebody just because, you know, they're ranked above me or they're higher in the system above me. But you know, not everybody's
I can see that. I can see that.
everybody's like that. So that was me, though. That was me.
Yeah. What the way I kind of look at it is trading that I do myself is an individual sport, and then when I go to my day job and I'm helping all these Fortune 500 companies, that's a team sport because I'm on their team. I'm like an advisor, like I'm part of their team, and they have risk tolerances and they got different risk strategies, and we got to apply what we're looking at in the market as a team. So you can do it both ways. Have an individual sport of trading, and then you have the team sport of risk management.
There you go.
Then but both sides need risk management. You're doing it by yourself or you're doing it with a team.
Yeah, exactly. Exactly.
So it's just different ways of applying technical analysis and things that I enjoy doing in just different realms is basically what it is.
See, Fibble's lucky. He found out that he enjoys doing it, and he enjoys doing it in both, and so he can do it. I mean, this is a discussion Fibble and I've had over 2 years now. He's like, man, you know, maybe one day I'll leave what I'm doing here, but God, you know, right now I just love what I do.
I just
love where I work.
Love it. It's fun.
I'm with, you know,
I get to do TA and all day, every day, and that's what I enjoy doing. So as long as I keep doing that, then and I'm decent at it, I want to keep doing it. You know, it's actually a feel good thing. So it's weird because like I'll trade on my own, and if I hit something that's great, and I get excited. But I also get excited when we do something right for a client, and even though I'm not making the money or avoiding the costs that they're avoiding, but I still feel pumped about it because I helped. You know, it's like I don't know. It's sort of like being on a baseball team. You know, like if I'm playing third base and I get a line drive to me and I throw it to first, I did my part, but you know what I mean? Like I get excited about it, but I didn't really win the game. You know what I mean? That's like I did something to help the team. So I kind of like both ways on that. But again, some people might not like the team thing. They just want the individual. Like what you're doing is great, and stick with it, and you do it that way. If I did not have the job I have, I wouldn't be doing anything else but individually trading. But which I kind of did in the early days before I started to get into the risk management. But I really enjoyed both, so that's why I kind of went with it. It's not for everybody, but it's just the way I kind of attack things.
Yeah, it's the same way Fibble and I feel. You know, when you guys are over at GWC and you're like, oh my God, I'm finally getting it. You know, and oh my God, I did this and I had this great trade. It's the same thing we feel. You know, we didn't take the trade. It is 100% you. And I will say that, you know, a lot of times a student will come and say, man, because of you, blah blah blah. I'm like, well, you know, listen, I'm glad I could be a part of it, but at the end of the day, you were the one who listened. You're the one that put in the effort. You're the one that put in the hard work. You're the one that took the opportunity, the chance to do that trade. It is you. And I mean, I appreciate you saying me. I mean, that's great and all, but really at the end of the day, understand it's you. You did amazing. And you made all the choices you needed to make to get to that point that you could do that.
Yep.
And so, yeah.
I am totally with you on that. I tell people the same thing. I'm like, I'm glad to help, but I am not the one that clicked the buy button. And I'm not the one that clicked the sell button. You did that. I did not do that. Because you physically have to go through the process to do it. And if you did it, it's on you, man, not me. I helped, hopefully. Maybe it gave you a certain guideline or a way to look at something that helped. Great. I'm glad that happened, but it's all you.
Absolutely.
So I always say good trade. That was a good trade. And they usually come back going, well, it was because of you, blah, blah, blah. I'm glad you said that, but it's really not true. I mean, kind of not really. It's really you. And I want people to understand that you did it. I did not do it. You did. I know it's really hard, and not everybody feels that way, but I do get a lot of people that said, you know, I couldn't have done this without you. I don't know. I might have helped a little bit, but it's still 90% you.
I'm just glad
Probably
what
99%.
said made enough sense to you, and you were able to take it in and
Exactly.
utilize it in a way that worked for you.
Yes.
I think that's what we're trying to get at here.
Yeah, exactly. I don't know how to say it, but yeah, you know what I'm saying.
I think that's what we're trying to say. I don't know. I get like, I'm like, yeah, no, I didn't do it. But I appreciate that you said that. I appreciate that you found something that's helped you in what I teach. That's what, it means that I'm making a positive impact out there in people's lives. And that's the goal, right? Because it's not for everybody. Just because you come in doesn't mean you're going to listen. Some people never get past the emotional side of it. And it's a difficult thing. And we work, with traders daily, trying to help them get through it. But at the end of the day, all that hard work has to be done by the individual themselves.
Yep.
And we can't do it for you, unfortunately. We can give you, again, the guidelines, the rules, the things that you should do, the things that have helped us in the past, how to look at things. We can give you encouragement. We can help keep you accountable. That's a big part of what I do at TWC is I help keep our traders accountable. I had somebody the other day, one of our students who had an issue with the trade. It like almost it was a gold trade. It stopped like just a couple of points from his target, and he ended up round tripping it. And I said, okay, well, here's what's going on. And I said, so if you're doing that, let's try this now. Let's modify it a little bit so that just in case you get into the situation again where you're near that, there shouldn't be any reason why you allow it to come all the way back and, heaven forbid, take a loss or even round trip it. There should be a way in which you're capturing at least some of those profits along the way to do that. And so, I discussed it with them in front of the other students so that they could learn as well. And I think we came up with something pretty good. But, it's a lot of work just to try and help you guys apply what we've learned over the years that have helped keep us in this game. To hopefully give you something somewhere that really resonates with you and makes a positive influence on your trading. So,
yeah, cool.
That's what we try and do.
I can't see any of the chat or anything. Is there any questions or anything before we head out?
Oh, they're calling you a snake oil salesman. They said you look like what's that, Halloween? No, I'm kidding, man. No, they love you, man. They love you. Sat says, I'm glad Fibo is part of the TWC team. He's great.
Oh, thanks, bro.
Let me see here. Yeah, Mark's in here, of course, always. Mark's way too kind, man. I love this guy. I tell you, if y'all need somebody like this in your life, somebody that's like your constant hype man. Mark is absolutely
great. I love watching his comments when you guys are like doing beards and Bitcoin and stuff. And I think that's kind of what spurs me on to be like a little pain in the ass sometimes too. I always like to just throw out funny stuff and mess with you guys while you're trying to be serious.
No, we know,
Mark's that way too, and I like it.
Yeah, what is round tripping? Round tripping is just when you're in a trade and it goes well, and then you don't take profits and it comes all the way back to where you entered. So in the case of that particular trade, it was like I think it was like a 23-point target. It went up to 20 or 21 points and came all the way back down. And so a lot of what we work with is helping traders figure out, okay, well, how can we get into a mindset and what can we do, strategically so that when it's up near a target like that, we're making sure we're taking some profit and we're making sure that we're not losing anything either. At minimum, when you're that close, you want to be taking some sort of profit and making sure your stop loss is moved back above your entry. So one, profit of some sort, and two, you're not losing money. And by doing that, that's exponentially beneficial to your account because you might normally be losing money on that trade. And in figuring out this way that we're talking about here, not only do you not lose money, but you also make money. So it's an exponential return compared to what you were doing previously. And guys, listen, I just want to say here, I know we got to go here, but here's the thing. Your losses mean a lot more to your account than your wins. Your losses, because every time you lose money, you have to make a greater percentage just to get back to that break even before you can even make profit. So when you're thinking, while we always talk about risk management is, as you're trading, you want to limit as much as possible your losses without, completely limiting your wins as well. And what that means generally is you tend to not get like these big, huge, but you consistently lock in profits. And again, by doing that, that gives you an exponential return on your account, because all those losses that you would have taken, I'm not saying you're not going to lose, but if you might normally lose 50 out of 100 trades, you might only lose 20 or 25 now. So you're already exponentially better. And not only did you not lose on those specific trades, but you also made money. So it makes your curve look a lot more curved up, which is what you want there.
Yeah.
So,
I always think of it like when you go into roundabouts, when you're driving and you get in and you miss the exit you need on the roundabout and you got to go around again. That's sort of the round tripping. And then sometimes if you go back around again and the traffic's really heavy, you can't get back in, and then you go back around again.
How many times can we actually go around before we break the law,
Yeah, but the thing is, what sucks is when you go and you miss your exit and then you come all the way back down around again, you're like, oh, I got to do this again.
Yep.
It's the same kind of thing. It's like, oh, I went through this already and now I got to try to do it again. And the market might not give it to you again. That's the thing that sucks.
Yeah, exactly.
No, good stuff. No, that's good stuff, man.
Hey, man, I really appreciate you making it out here. I'm sorry we couldn't do it last time. I'm sorry we almost missed it this time because of the internet here. But
well, I'm glad it worked out. And not next Friday because the holiday, but the next Friday after that, and I'm open a lot more on Fridays now, so
awesome.
Should be good to go.
Yeah. Speaking of which, guys, as you heard, there won't be a show next Friday because again, we're going to be on Thanksgiving. Be spending time with family. I will have a show on Wednesday with, at least right now, I believe it's still scheduled, with Andrew and Tillman from Arch Public, our Beards and Bitcoin show on Wednesday.
And speaking of that, I can't make it Wednesday because he wanted me to come on and talk Japan.
Yeah.
I actually wrote a little thing on your on the Friday TWC newsletter.
Okay.
I wrote it in there instead of being able to go on the show. And I actually sent it to Andrew too, so hopefully you read it.
Okay. All right, great. Yeah, it gives us something to talk about, And those that watch the Beards and Bitcoin show, I believe I've got, hopefully, Dave Weisberger is going to be joining us sometime here soon. And we're going to start trying to get some guests on with us as well, just so we can kind of pick brains and get some thought processes going in there. So a lot of stuff out there. But anyway, hey, listen, Black Friday is coming up. I'm going to put out a special today. If you guys aren't a part of TWC and you'd like to be a part, be watching for that. That'll be the big discount. And then, and I think what I'm going to do, I'm going to give like the biggest part of the discount, like for the first maybe 24 or 72 hours. And then it'll still be a discount, but it won't be quite as big after that. And maybe one more notch where the discount drops a little bit more as we get into Black Friday, just kind of making sure that people that are serious about it, go-getters that get out there and decide they really are serious about doing something, get out there and can do it and get rewarded for it. So, yeah. But anyway, Mr. FiboSwanny, Mr. Mood Mechanic, Mr. Metallica, Mr. Metalhead, Mr. Older than me by just a few years there, even though I think I still have more white than you have, and you definitely have better.
I'm getting more and more every day, but I definitely got good genes when it comes to my family because all the guys in my family had a full head of hair at 80 years old, so yeah, that helps.
Nice.
Not saying that bald's bad. I'm just saying that.
I wasn't going to pull you in there, man, but now that you're bringing it up.
I didn't mean it that way. I was just saying, never mind. I'm not going to dig any more of the hole that I'm already in.
Oh, man. All right. Hey, listen, guys. As always, remember the only thing you control is how much you lose. So please keep working on that risk management. I hope y'all have an amazing weekend. Y'all trade safe. If I don't get to talk to y'all because you're busy next week with the holiday week, please have a safe time. Travel safe if you're traveling. And then we'll be back for the next market breakdown 2 Fridays for now. But prior to that, again, next Wednesday, we'll have Beards and Bitcoin, okay? Thanks so much, FiboSwanny. Appreciate you, buddy.
Thank you, man.
All right, take care, everybody.
Trading tip: always manage risk before chasing gains.